Soon.
Hey, how's it going? I'm Dan Fradenburgh, and I'm a real estate guy. I'm joined today with Chris Galizio. How you doing today, Chris?
I'm hanging in there. Good to see you, Dan. Thanks for having me.
Excellent. Oh, my pleasure, my pleasure. And of course, this show's called Chess with Investors. Originally, I called it Chess with Commercial Real Estate Investors. Then I was like Chess with Real Estate Investors. And then I'm like, you know what? Let's just call it Chess with Investors. But what's going on here? Basically, what I do is I get people to come on and we have a chat about investing in general, real estate, that sort of thing. And we do it over a game of chess because after all, if it's going to be on the internet, then it has to have some sort of gimmick. But Chris, I met you through a summit that I was hosting. I was one of the co-hosts for it, and you were discussing economics and the future. I remember it was around the end of 2022, so interest rates were already going up. People were in a little bit of a bad mood because of the interest rate hangover and all that money printing and all that kind of stuff. But Chris, do you want to introduce yourself to the audience while you try and get that chess.com account
It'll
open?
take you a second to get this going, but I'm a former large cap growth fund manager at Fidelity. I grew a fund from 20 million to 7 billion. I then left Fidelity, ran a hedge fund for a couple of years, started to notice that nothing makes sense. So I wrote a white paper about it. The thing that got me to write the white paper was the repo market spike when interest rates went from 1% to 10% in a day. And I thought to myself, if interest rates go to 10%, what would happen to the to stocks? And of course, the Fed stepped in and bought every single repo. They nationalized the market. When you remove risk from an ecosystem, the ecosystem changes. And so you're watching a situation where the ecosystem of capitalism is now broken. So everything, in my opinion, is now operating in reverse. So companies that go up the most are the ones that lose the most money. Companies that go down the most are the ones that make the most money. And so I can show that to you as we talk, as we go through the thing. Now, Dan, it's going to take me a second to download this game. So how do you want to do that?
Yep, yeah, just go ahead and we'll just try and chat. It's like that's one of the other fun things about this format is it's multitasking intentionally. Maybe somebody actually I should tell you I did a post a poll on LinkedIn, which is definitely the best way to reach me. I know Chris, you're also very active on LinkedIn, but I did a poll getting people to guess how many episodes of Chess with Investors I was able to record before accidentally letting a curse word slip out. And I tell you, I don't know what it is, if it's me or if it's my audience or what it is, but they underestimated me. The consensus is they think I didn't even last 5 episodes, but I think I got to 28 before I actually let one slip. But that makes me giggle like I'm in elementary school again. So that's part of the idea here. But I'm particularly excited. So one of the things that makes me so confident that I have a clearer idea of how the financial world actually works. It's because back in 2009, I got really deep into currency trading, and at the same time, I was teaching one person who was a PhD candidate in economics, and he ended up getting it, months after. And also the head of the currency trading, the speculative currency trading department of Taiwan's second biggest bank. And so he would send me the different bank reports that they send to each other. It's like, okay, so here's the band that we're planning on trading in. So if it gets above this value, then we're going to short it. And if it goes above, this, then we're going to go long. Those different analyses and all that sort of thing. And one of the things, like I guess to fence it in for the audience, we should mention more about the money game, the film that you're putting out, especially the one aspect, which is I thought it was going to be sort of like a documentary, sort of like some people have done things like Creature of Jekyll Island, talking about how central banks create money and what that means for people who are trying to, I'm going to say, try to store value. So, for example, I saw somebody who had, there's a meme that's come out again, which is it has a 1 kilogram bar of gold, and it said 10 of these would buy a house in 1924, and right now 10 of those will buy a house in 2024. And of course, like that's been consistent for a few thousand years. I'm not sure if the link is having some trouble there, but do you want to say a thing or two about money game, or do you want to go on to uh, things about central banks? Where do you want to take it?
Let's talk about money game. There's a lot of, I mean, we can talk central banks the whole time, but a lot of it's in money game. So the opening quote of money game is, the task is not to see what no one else sees, but to think what no one else has thought about that which everybody sees. Because I think the entire world is seeing that nothing makes sense. You're looking at companies like Carvana go from 3 to 147, where the company doesn't earn money. We're watching GameStop go from what was it, $300 million, and it went to 20 billion. There was actually a simple deli in New Jersey trading at $10 million. And they were losing money, losing $400,000 a year, called Hometown International. You would, if I said I want to buy it, you would have laughed at me. The stock went from 10 to 115 million. So what we're trying to do is, in money game, we're trying to explain it. We're trying to explain why things are happening the way they're happening. And the way Professor Gardner is going to explain it, he's going to say, finance is the simplest subject you'll ever learn. It's based on one formula, value of $1 paid annually. And all you need to know is the interest rate. If the interest rates are 10%, it's 1 divided by 10%. It's $10. If interest rates fall to 1%, it's 1 divided by 0.01. So now it's $100. And he's going to say, if interest rates go negative, all assets are worth infinite. My coffee is worth infinite. My desk is worth infinite. My chalkboard's worth infinite. Does that make sense? Of course, it doesn't make sense. But that's what you're seeing in markets today. And so we're trying to explain it in very simple words through a storyline, by the way, which money game is a storyline. It's kind of like Goodwill Hunting, because it's a mentor relationship and a love story. Meets Wolf of Wall Street, sex, drugs, all that type of stuff. So we wanted to make a movie that everyone will want to see. They'll get some financial concepts, but at the end of the day, they'll be entertained by the movie.
It kind of reminded me, the preview reminded me a little bit of Pursuit of Happiness with Will Smith, where it looked like the main character was getting on their feet financially, and it looked like financial literacy is a major theme in it as well. Am I right on that, or is it more about the system as a whole, and the characters are more just pawns in the game, I suppose?
No. So the characters are so to me, what the characters represent is the real economy. So the main character is Daniel Washington. He's James in the movie. He represents the real economy. Bryson Hill, the villain in the movie, he represents the financial economy. So in the financial economy, as you know, all assets are worth infinite, right? You're trading at infinite. Look at companies like Snapchat, TikTok. They're companies that lose money. Snapchat had a 70% gross margin. Negative 70% gross margin, right? So the more they produce, the more they lose, right? Who would ever buy that? No one. So who's buying it then? It's passive, right? When you remove risk from an ecosystem, the ecosystem changes, right? So when the Fed played the money game and they manipulated interest rates, the ecosystem shifted from humans to passive and quant. So who's buying all these things? It's passive and quant. It's machines. So why are the machines winning? Are they smarter than us, even though passive doesn't think? Of course, they're not smarter than you. Humans are smarter, but they have no morals. Think of it: a machine has no morals, right? So they will pay an infinite valuation for a company because they don't care at the end of the day if you, the investor, wins or loses, right? So they won not because they're smarter, but because of moral hazard. I think that's a really big topic. I also think there's no price discovery in markets, right? Me, as a portfolio manager, I know because the entire system shifted to machines. Professor Gardner will say it's a bunch of followers, quant, following followers, passive. It's like a cat chasing its tail. There's no price discovery in markets. So once you understand that, who's the buyer? So once you understand, you can look up at the companies and say, look at Boeing. Who would ever buy Boeing, which has, over the last 5 years, since 2019, hasn't been able to cover its interest expense? Nobody. There's not a person in the world that would look at the numbers and say, I'm going to buy that. So why is it trading at 110 billion? Because it's all passive and quant, right? And so think about it in a world where you're issuing shares every year. If the closing quote in Money Game is if passive ever gets bigger than active, there'll be chaos and catastrophe. Our markets will fail. And that's from Jack Bogle, the founder of Passive. So right now, passive is probably 62, 63% of global markets. It's bigger than passive. So the ecosystem changed. It's one of the biggest points in the movie. Professor Gardner will raise the book, The Efficient Market Thesis. He raises it up. He then laughs and throws it in the trash. And he says, smart people thought the world was flat once too. And he says the most underused books in finance are history books. Governments manipulate markets. That's what you're watching. So if you look at the poster of Money Game, our tagline is "Don't get played," because the Fed is playing the entire globe to finance U.S. business. You're not investing in Boeing. You're providing the financing. That's pretty big topic.
Mm-hmm.
Am I good on
absolutely. And
is this chess thing?
It still hasn't. Yeah, it says you still haven't joined. I'm just gonna paste another challenge link in the chat to see if that'll work. Because as soon as it's accepted. Mm-hmm.
I see it up here.
Yeah, it's inside StreamYard. Inside the chat, inside the StreamYard. Yeah, you'll see the challenge links in there. But I really love your perspective on all of these. And one thing I want to do, especially for the audience, is I want to take it back to what people on the ground level of the economy end up seeing. So I'm saying working stiffs, people who may or may not be involved in, these big, multinational, high cap, publicly traded companies, things like that. I think a lot of what people see is the Pareto principle of like productivity. What percent of the company is actually able to produce? And the answer is quite stunning. And just like the fast version is that if you have about a 10-person staff and you're really focused on hiring the producers and you're getting rid of people who are more or less dead weight, realistically, they say about 3 people will be responsible for about 50% of the productivity. And that's not a linear increase as you scale to 100 employees. It'll be, instead of what works out to 30%, it'll be closer to 10% of people are actually producing 50% of the results. And for some reason, it seems like that's okay to people. And I think that's the most confusing part. And what I've been thinking in my own thought experiments, and I've had a really eclectic career with different sectors, especially with when it came to translation and living in Asia. I ended up wearing a lot of different hats and being exposed to different business models, different business types. Me being a tech guy, drop shipping was something where like I was the tech person who made it all happen, all the different integrations. And I'd get to see, as a person who built websites, what sort of margins people were actually making. And it's actually quite astounding how upside down it really is. And it seems like the most important thing, like I think laziness is a huge factor in why nothing quote unquote makes sense. I think it actually does make sense a lot more if you're familiar with finance, but it doesn't seem sustainable. Is kind of my take on that. I guess one of the bigger examples I'd see is that when I worked for web.com, they ended up acquiring Network Solutions, which was actually a bigger company than web.com. And after studying what Warren Buffett says and things like that, I was starting to get wise to just how numbers get padded. And of course, in real estate, that comes out the most in underwriting. And basically people, all they want to know is like, okay, well, last year it said that they had $365 million in revenue. This year they have, say, and I'm just pulling out fake numbers here, right? And this year it's like $700 million in revenue. And people are only paying attention to that. They're not paying attention to, it's like, okay, well, what about debt service coverage ratio? Like what's overall, like how leveraged are they? These different things that if you were looking at a small business, it says I've been disconnected. So it wants me to refresh and make a new challenge
I
link. So
see.
I'm going to do
I
that.
actually sent you a friend request to connect.
Oh, okay. Yeah,
That's
we won't. Okay, we'll do that too. But I'll put in a new challenge link, and then that should work. If you want to try that challenge link, it should pop right up. In theory, it's a new one. Yeah.
Is it the same place I was
So
before? Let's see. I don't do it right here. Nope.
yeah, in the private chat. Yeah, in the private chat there.
Oh, play chess. Private chat.
Yeah. So there you go. Yeah, we can edit out this this chunk anyway.
We're playing. Oh, is this it? So do I hit play here?
Yes, you do. Okay, cool. And I'm white. We got it. All right. So I'm going to start off with this one. So let's talk. So when it comes to all of this sort of these pieces of the puzzle of the financial sector and governance, I really think it does have a lot to do with chess in the sense of you have to really pay attention to the cause and effect. You also have to make your move in the next 35 seconds.
Yep. Let me get there.
And then after that, we can relax.
Come on, Rob. Let me get my thing. Come on, please work. Okay. Here we go. I had it. Hold on. Let's go there. How do I move this? I'm in the
you're black.
I'm black. Okay, hold on one sec. Boom. God, this is not good. I'm trying to move the thing. I don't know how to move it. Let's see. 10 minutes still searching. I don't know what that means. I'm doing it right here.
Yeah, it looked like it.
Am I playing on the on the thing we're looking at?
No, it's in the chess.com tab.
Chess.com tab. Hold on.
Yeah, I'm just sharing the screen for the audience.
I see.
Sure.
Okay, I got it. Boom, I got it. There we go. Sorry. Now
cool. It worked. All right, good. Yeah, so I'm going to go ahead and do this then. But so yeah, there's a lot of pieces of the puzzle. I guess another. Go ahead.
There are a lot of pieces of the puzzle, right? So when you remove risk from the ecosystem changes, right? But then the entire system starts to misallocate resources, which is the theme of the movie, right? Capitalism requires risk to allocate scarce resources, right? So the Fed removed risk from capitalism. So now what you're watching is the entire system is beginning to misallocate resources, right? Which slows the real economy. So that's what you're seeing. If you look at the, so here's the irony. People are focused on the stock market and not realizing the real economy is no longer growing because we're pouring trillions of dollars into companies like GameStop, CloudStrike, Boeing, companies that don't make money. I actually believe that things are working completely opposite. You talked about Twitter, and I'm sorry, you talked about companies laying off people, and that 10% of the people make 90% of the profits. Notice that Twitter cut like 80-90% of their staff, and the system still operates perfectly fine. I think the stock market is a financing system. I don't think it's an investing system.
Yeah, that makes a lot of sense to me because I think what it's come down to is the only businesses that work are ones that are fundable, and the numbers don't seem to be coming into that equation. I think people are going like, oh well, I'm hoping for a miracle / unicorn / whatever you want to call it, and so we'll go ahead and put some money in this business like Uber, for example, that I don't know if it's ever stopped hemorrhaging cash, but
so think about Uber. Why
exactly.
is Uber going up? Think about this. So Uber keeps going up, right? And the stocks, whatever trades, I don't know what the number is, 30 billion. I don't know off the top of my head. But we all know what the value of Uber is, right? A company that loses money is worth zero, right? So why is it going up?
Should be, yeah.
Well, think about a passive world. If a company issues 10% shares per year, okay? So they issue 10% shares per year. Who makes the adjustment for dilution in a passive world? Nobody, right? So in a passive world, if you issue shares every quarter, on the quarter, the passives have to buy more. They're forced to, right? It's part of the index. So if there's more shares out there, the passives on the day you report have to go up. There's no option, right? They have to buy it. And if they buy it, the quants are basically following momentum. So then they buy it. So my belief is these stocks are going up on the quarters, not because they're beating expectations, but because they're issuing shares, which is the opposite of capitalism. Now, if you believe that that's true, then you have to believe the reverse of that. If you were, well, first of all, let me ask you a question. If you owned a business, would you care more if they made money or beat expectations?
Right. Yeah, absolutely. Yeah, it should be made more money because that's, yeah.
Notice that what they're telling you, the stock's going up because they're beating expectations, even though they lost a ton of money. Wow, that's a nice move. Hold on one second. Can you see that?
Yep.
Okay,
right,
good.
So next up.
But notice they're going up, not because they're beating expectations, but because they're issuing shares. That's the reverse of capitalism. So it's the entire system is being manipulated by the Fed. So that's why I say the tagline for Money Game is "Don't get played." Notice people are going to say, "Well, why would you buy Boeing, which has lost $4 to $5 billion for the last 5 years? Why would anyone pay $110 billion for it?" And then they're going to tell you, "Well, it's because the Fed's going to cut rates." Well, then you're being played to finance the business, right? If the reason is a macro decision and not a bottom-up decision, then you're being played, right? And right now, the entire globe is being played to finance U.S. business, and that's a big topic. And there's no price discovery left in markets because there's no humans left in markets. Professor Gardner in the movie will say, no one picks their own stocks anymore. The lions have been eaten. It's a bunch of followers, quant, following followers, passive. It's like a cat chasing its tail. Once you understand that markets are broken, you're holding a crystal ball, right? Once you understand that everything's working in reverse, you can go buy a company like Petrobras, which earned $40 billion last year and trades at $86 billion. Right? You can buy Stellantis, which is a real assets, right? Look at it right now. Stellantis has it's one of the probably the fourth or fifth biggest car company in the world. It trades at $48 billion. They have $42 billion in cash sitting on their balance sheet, and they earned $18 billion in operating profit. So effectively, you're paying $6 billion for $18 billion in operating profit. Why aren't people buying it? Because there's no humans left in markets. There's no price discovery. That's a big topic.
So I want to get back to central banks themselves, because I think most people haven't got the faintest clue on what they're supposed to do, what they are actually doing. I guess I'll start off by saying that it's one point where when the subject of central banks come up, there's one that I'm not sold on, which is the people who say that the Fed needs to be ended. Now, the reason why I have a little bit of an issue and why I say, okay, like end the Fed, I don't think is a great policy, is because I look at other countries and I see how their central banks work. And I see, like, for example, like over in Asia, I lived in Taiwan for 15 years and working with that head of the currency trading department at Taiwan's second biggest bank. He opened my eyes as far as what Japan has been doing or has done in the past, and what I'm talking is being super duper interventionalist.
Correct.
So what they like, I know that one thing they've done before is I think they did a change of, oh man, I think it was like a 10-cent, rise and dip that they ended up putting in over the course, like over lunch break of the Japanese yen, and the reason was to destroy all the short sales and all the longs with the big kablam kablam hitting their technical barriers, and just the idea being is that I guess you have to understand that the Japanese economy is an export economy. So that means there's natural downwards pressure. What happens is people are always collecting their US dollars as income, and then they end up buying the local dollars to spend. And then that just basically means that like the other version, the other direction doesn't counterbalance it. And I think it's
Right.
because I'm playing chess that I explained that really, really poorly.
Totally fine. So it's
Yeah.
okay. So look what the U.S. is. What's the
Mm-hmm.
U.S.'s biggest export over the last 20 years or 30 years? It's dollars. That's our biggest export. We've run a current account deficit and a trade deficit for 30, 40 years. Why? Because we're the global reserve currency. Right? We're the global reserve currency of the world. So think about we print money. If we need more Toyotas, we just print more money. So they're selling us their goods, and we're sending them dollars. I think what you're watching is the end of the global reserve dollar as the global reserve currency, and I wouldn't even say as the global reserve currency. What I would say is I would say that we're at the end of U.S. Treasuries as a global reserve asset, because normally what we do is we run a huge deficit, which forces us to, so we basically ship dollars overseas, then they take the dollars and they stick it back in U.S. They recycle it back into U.S. Treasuries, right? But notice they're no longer doing that. Now what they're doing is they're taking those dollars, they're marking them return to sender, and they're saying we don't want these dollars. We're going to, rather than recycle it into U.S. Treasury assets, we're going to buy commodities. So you're seeing China, you're seeing the globe buy 10, 15 years of LNG or oil, or so. What I would argue, you should be doing the exact same thing. Global countries are doing, rather than sticking it back into bonds, which we know that they can't pay back. Right? There's no way the U.S. government can pay back $35 trillion in real terms. They have to. The sucker at the card table is the investor, right? I saw inflation came out right now. Inflation was 3%. Number one, I don't believe inflation 3%, and interest rates are 5%. But even if we take the numbers that they have, and say that that real return is 2%, which I don't believe, then you're only getting 2%. And you're risking lending to a country with $35 trillion in debt that can't pay you back. Why would anyone do that? And so countries around the world are basically no longer doing that, right? So I mean, we see inflation go through the moon. So there's been 52 countries globally in the that have ever existed that have had debt to GDP of 130%. 51 of them have defaulted or hyperinflated. The only country that hasn't was Japan. Why? Because Japan is part of the dollar system, right? They work together. Think about what the G7 is. The G7 is the U.S. It's all the people who won the war, ex Russia, ex China, right? It's the U.S., UK, Canada, and France, right? Adding now, all of them except for Canada have nuclear weapons. Notice the other 3 countries are the countries that were taken over: Japan, Germany, Italy. And all of those very sophisticated countries don't have nuclear weapons. Pakistan does, but they don't. So I would argue that group, that bloc, works together, because that's why we talk about the West, right? We all work together. That's NATO, right? So I just think I think the World War II set this whole path in place. As a matter of fact, when you look at Orwell, George Orwell, 1984, he talks about 3 main blocks. He talks about Oceania, which is U.S., UK. He talks about East Asia, which is China, and he talks about Eurasia, which is effectively is Russia, right? And each of those blocks have nuclear weapons, and none of them can ever take over another one of them, because if you do, they're going to nuke you. Those are no-go zones. So that's why we're fighting in Ukraine, because we can have proxy wars, but we can't actually enter Russia. Shockingly, this week, Ukraine really did enter Russia, and that's why this is such an important time. And it's one of those times where global commodities change. And you said you don't want to end the Fed. I don't think there's any option but to end the Fed. And it's not going to be something that we're going to get to choose to do. What will happen is the currencies will collapse. and then you'll be forced to stabilize the system with gold. So it's not something we'll ever choose. It's something that's be forced upon us.
Okay, so this is also something that I put a ton of thought into it, and I know that you got almost 8 minutes left in your clock there, and we can go ahead and do a rematch after we're done as well. But so one of the things that I've been thinking a lot of and talking to other people as far as like what is a major collapse look like at the end of the day, and the thing that keeps on coming up, and this is as I'm not American, and so like I don't have that horse in the race in that sense. But the retort that I keep on getting back from people is that America rules the seas. Now, I
100%.
understand that if America ends up running out of money, then how are you going to, man the boats? And I just don't see how that, like, I don't see what mechanism, because like from engineering, I think of things in terms of forces.
Right.
And when it comes to forces that would like conceivably actually work, like I just don't see the force that would stop. Like I think America would think of something and keep those patrol boats going, because it really is all over the world. And digging into the naval history has been pretty interesting, like finding out that America's been patrolling Africa since before the Civil War, because the UK used it as part of one of the deals that they made, because they were apparently stopping fraudulently flown American flags off the coast of Africa, and that sort of thing. So what are your thoughts on that?
Sure. So the force is so compound interest is undefeated versus the greatest militaries in history. Every military history has been beaten by compound interest, not by their competitor. We won the Cold War because Russia ran out of money. Right here today, everything is reversed. Russia has 17% debt to GDP. We have 125%, but that doesn't include all the entitlements. When you include the entitlements, I think it's like 300%, which is unsustainable. So I don't think I think we're going to lose from compound interest, not from Russia. Right? I think we're going to run out of money. And I agree with you. The U.S. has the best Navy in the world. We have, as a matter of fact, I just looked it up. We have 11 aircraft carriers. China has 3, and they're building a 4th. Right? We actually have 40% of all aircraft carriers on the globe. Now that said, they have hypersonic missiles. Right? So I think if it comes to that type of thing, we have the Abraham Lincoln right now is shifting from the China Sea into the Middle East. It's being sent over there. If that ends up there and they decide to use a hypersonic missile, we have no defense against it. I'm not even sure if aircraft carriers are viable these days with hypersonic missiles out there. So we'll see how that goes. It's just a very interesting time. It's one of the most. I think this is one of the most interesting times in history. These things these wars typically happen around currency shifts. I think so. One of the quotes I use of Money Game is that Money Game will timestamp the biggest currency shift in history, because we're about to shift away from the dollar as the global reserve currency. And by the way, notice that BRICS have already shifted to gold. I mean, we've had these countries. Gaddafi wanted to create a pan African currency, and he's gone. Right? We had Iraq, same thing. He wanted to create. He wanted to use gold and all that type of stuff, and he's gone. Right? So I mean, these things happen, and they've been happening. The thing that's interesting, I think markets are being manipulated like no time in history. There's a quote from Joseph Goebbels, the propagandist from World War II, the Third Reich.
From World War II.
You can tell a lie. If you tell a lie and keep repeating it, eventually on CNBC every day that markets are efficient, eventually people come to believe it. You can only protect the people for as long as you can protect them from the military, economic, and the economic, military, and I don't know, financial consequences of the lie. Political, that's what it is. Political, military, economic, and political consequences of the lie. So we're watching a market being manipulated. It's not a market that makes any sense, and that's why things don't make any sense, because they're manipulating markets. You're getting they have the entire globe. Right. They've got the entire globe.
I think we got some lag here, but yeah, go ahead.
No, it's okay. They have the entire globe being played to finance U.S. business. That's a big topic. I mean, there's right now, if you look on the Fred charts, there's the net international investment position. U.S. GDP is what, 35 trillion, something like that. The net international investment position,
somewhere around there,
held overseas, is about let me think about this, $22 trillion. So it's like 80% of U.S. GDP. So if those countries decide to sell anything, if they sell our bonds, right? If there's no demand for our bonds, then interest rates are going to spike, right? I think what's going to have to happen, it's the second biggest quote in the movie. Professor Gardner will say, von Havenstein, the head of the German central bank during the Weimar Republic, had a choice: print the money or trigger the revolution. I think what you're watching is a situation where the U.S. is in a Hotel California. They can step in anytime they want into the bond market, but they can never leave. And I think what you're going to see is the U.S. is going to have to print every dollar to buy every single one of those bonds. If they do, you're going to see worthless currency. And by the way, look at
you got less than 2 minutes, so you might want to.
Okay, I'll finish it up. So
you can keep going. I'm just saying for the moves, because you lose automatically if you run out of time. We could stay on. Yeah, that's what I mean. The chess game.
Okay, there we go. So look at the what's happening in terms of so in 1998 we had the tech crisis, right? And then they had to step into markets. Then in 2000, then they kicked the can down the road. Then in 2008 we had the financial crisis, which was much bigger than the tech crisis, right? Then they printed money and kicked the can down the road. One of the quotes, the tagline that we thought about for the movie was "the buck stops here." What I mean by that is the dollar stops here. One of the quotes from Money Game is if the government assumes all the risk, it's the currency that's at risk. It reminds me of a scene from Superman. Lois falls out the window. Superman dives down and saves her and says, "I've got you." And Lois says, "But who has you? What are you backed by?" Right? So if the government steps in, and it always has to be if they're the ones who actually step in consistently, well, then it's not a real market. So that's why I say you're being played to finance U.S. business. And it's all because think of this. The U.S. is 72% of global markets. If you take all of the G7, it's probably 87% of global markets. U.S. is only 4% of the population. How can it be 72% of the markets? Because the U.S. controls financial markets. As a matter of fact, we saw what happened when Russia invaded Ukraine. It was the U.S. That sent every Russian stock on the planet to zero. They made it illegal to own Russian stocks in the U.S. So Orwell talks about that. He basically says if we don't need to take over East Eurasia, we can just exit them from our system, which is effectively what they just did. They kicked Russia out of the global financial system. Isn't that amazing? Congratulations.
Yeah, thanks. I just hit the rematch button in the bottom right. Yeah, I went on time, but that's all right. We can keep going. So one idea. In the bottom right hand corner, it should show the little challenge for the rematch. But the other thing that comes to my mind, especially because of and you're white this time, so you have to go first. But out in Taiwan, the currency right now is the new Taiwanese dollar. And the new Taiwanese dollar came out around, I think it was in the 60s, somewhere around there. So it's not that new. It may have been, actually, it was, I know it was before 1980 at the very, very minimum, but I'm having some difficulty remembering. You know what? I'm going to try this. I'm having some difficulty remembering how it is. But anyway, so that's one thing that I'm not sure how that works. Like, I imagine America would have to back an alternative U.S. currency, like a new U.S. dollar. They'd have to back it buy gold or something like
I
that.
agree.
But like, isn't that a potential option?
Well, one option is this, and I don't know all the numbers off the top of my head, is to pull over on a weekend. So first of all, there's a quote from Guns N' Roses. You should have seen it coming, but we gave you too much time. It's from Como. We all see that nothing makes sense in markets. So think about this: if they decided to some weekend, they decide to say, okay, the U.S. has too much debt. We're going to raise the price of gold from 2,500 to 25,000. Now all of a sudden the U.S. has, I don't know what it is, $12 trillion in gold reserves that they can then use to pay down that debt. So now the debt has just gone from whatever it is, 35 trillion to a fraction of that because they can pay it off with gold. So I think what you're seeing is that, and I think that's how this is going to play out. You're going to wake up some weekend, and by the way, this just happened in Argentina, right? They cut the value of the currency by 52% in a day. So your coffee went from $3 to $7 then over the weekend. So it's not something people are going to have time to think about and go, oh my God, the markets will figure this out. It's something that that's going to be instituted over a weekend, and you didn't have enough time. You ran out of time. Sorry. So my belief is you have to get ahead of that. And I can't predict when it's going to be. I would say what I've been saying with Money Game is Money Game will timestamp the biggest currency shift in history away from the dollar as the global reserve currency, right? I think it's in Money Game. We just sold Money Game. We have a 10-year contract with Buffalo 8 to distribute it. We're at movie theaters right now. We don't have a lot of theaters because we don't have the budget to roll it out to 100 theaters at a time. I can say the theaters we've put it into, we finished second behind Inside Out. By Disney, but that's one of the biggest Disney movies of all time. We beat out Furioso, we beat out Bad Boys. So we have a topic that's really important to people. We've gone to 5 film festivals. By the way, it's impossible to get into a film festival. We've gone to 5 film festivals and won best film at all 5. So it's resonating.
Nice. I mean, and that's down all in the U.S. or around the world. You're coming up to Ottawa, Canada.
Well, so we've been in the U.S. We won the Boston International Film Festival. We won the International New York Film Festival. We've won Best Screenplay at 3 of them. We've won Best, Best Director, Best Lead Character, Best Villain. The villain in my movie is the CEO. Think about this. The villain in my movie is the CEO of Tap It. By the way, Tap It. Let me just see if you can see that. So there's the symbol of Tap It. It's the A and the P in Tap It. And can you tell what that is? What that symbol is? Looks like a big ball with a small, right? Big balls with a small jump, right? So, and that's the A and P in Tap It. And so think about so Bryson in my movie is saying they just played basketball with James, who represents the real economy, and he's got both his middle fingers up like this. So you can see that. Got both his middle fingers up like this. And he goes, James, why do you think my company is trading at $4 billion? It's the concept, man. And I'm the concept. But it's not because of that. It's because interest rates are negative in real terms. When stocks are when interest rates go negative, and we all know this, as interest rates fall, asset prices rise. When interest rates go negative, just mathematically, all assets are worth infinite. That doesn't make any sense. No return for the investors. There's no return for bondholders. That's why I say at the end of the day, the Fed keep kicking the can down the road, kicking the can down the road until you get to a point that it's the currency that's at risk. And so I think what you're sitting at, if you look behind Professor Gardner, you're going to, in one of his classroom scenes, it says sovereign debt crisis, right? So we're in a sovereign debt crisis. That's why stocks, by the way, stocks go up during a sovereign debt crisis. We're watching stocks go up every single day, right? Because they're manipulating markets, right? Think about this. If you saw a herd of gazelle, if you looked out your window and saw thousands and thousands of gazelle, would you say to yourself, the ecosystem is booming, or would you say there's no lions left? Right? So and the answer is there's no lions. So during a sovereign debt crisis, stocks go up because the currency is falling, inflation. Right? And the irony of that is you can buy real assets right now in 2, 3-4 times earnings. You can go buy Petrobras right now at less than 4 times earnings, right? During inflation. You can buy Zimcorp. Zimcorp is a shipping company out of Israel. They in 2021 and 2022 they earned $9 billion. Trades right now $2 billion. How can that be? Especially when you look at shipping prices have gone over the last year from 1,000 to 3,000 because the markets no longer read the news. So once you understand that markets are broken, you're holding a crystal ball because you read the news. But you have to understand that our stock's going to reflect what you think in the short term. I have no idea. I ignore the scoreboard. Professor Gardner is going to say, the Fed's supposed to be like a referee in a football game. No one's supposed to notice him. But now they've flipped the field 90 degrees and broke the scoreboard. The scoreboard's broken. If you know, so what's happening is the players on the field are no longer scoring, but the scoreboard goes up every day. They're all losing money. 30% of the market loses money and can't cover their interest expense. We all know the value of it. It's zero.
Right. So let's think about that. Like I want to take that back to first principles, somebody who doesn't have a whole lot of financial knowledge where they come from. And I think the most important first step would be understanding how, like, what inflation actually means. And the way that I like to describe that now is I point out that if you had a $100 bill, actually I had two $100 bills. One of them you put on your kitchen table. The other one you invest in something that matches or beats inflation. Then in theory, like if we say like 3% inflation, that would mean 1 year later, the $100 bill that you left on your kitchen table would only be able to buy $97 worth of last year's stuff.
Correct.
Whereas the one that was deployed, in theory, you should be able to get your, $110 or something like that, which should, in theory, mean that you can buy $100 worth of last year's stuff with that bill. So in other words, money that's sitting around is losing value all the time, all day, every day. I think that, so that's, I think, really pivotal for people to get their heads around. How am I going to do this one? You know what? I'm doing some unusual openings with you today, just so you know.
It's okay. I have no idea what I'm doing, so it's all good. I'm enjoying the conversation.
I'm going to try this. Yeah. So that's inflation, and so that goes into store of value. And so you mentioned gold a few different times. That's really important. It is the reason for why countries are choosing gold instead of U.S. dollars. That's what they're trying to do. Is they're trying to get something that maintains value more than what at the end of the day is a bunch of ink on some paper.
100%.
So another thing other than a commodity, and I'm saying real estate's not a commodity, even though I think you could debate that a little bit. But when it comes to real estate, that's something where there's, what do you want to call it, an animal desire attached to it. So just like commodities, it has some inherent value. What's it going to do? Like, will it match inflation? That's a totally different story.
So think about this.
What I was going for when I got into, go ahead.
So think about this. Okay, so if I'm right that the currency crashes, okay, let's say you put $100,000 into $1 million property, okay, and the currency crashes. What do you owe back? You owe back money that's getting printed out of thin air. So in real estate, so you basically effectively paid $100,000 for the real estate, and you owe nothing back, right? Because if I'm right that the dollar is going to collapse, then real estate is a great investment. It's a real asset. As a matter of fact, in the movie, you're going to see James. At the beginning, he's a widowed father. At the beginning, he's hiking the Appalachian Trail. His wife is hiking. His ex-wife, who dies and I won't tell you why, all that stuff. But he's a widowed father, and so all you're doing is seeing flashbacks. They're hyping the Appalachian Trail. At the end, you're going to see that James buys real assets, and he's going to buy real things. And during a currency collapse, he buys real estate, by the way, right? He buys a house, and it's got lumber attached. What happens during a currency crisis to lumber prices if the currency crashes? Goes through the moon. Part of our storyline, right? But here's the irony of that. Think of a company like Petrobras trading at, it's really probably 3 times earnings right now. Now do the inverse of that. 1 divided by 3. So what's your yield on it? 33%. So that's if the price of oil doesn't go up. So that's the irony of the situation you're living in. You can buy real assets at 2-3 times earnings with 30. How can that be? We all know there's inflation. Why aren't they reacting? Why aren't the prices reacting? As a matter of fact, the prices are going the other direction because they're being manipulated. What they're doing is they're manipulating price and anyone in the world would look at that and say, well, I want inflation hedge. Well, not only can you get an inflation hedge, but you can buy it at 3 times earnings with a 33% yield. Look at Ecopetrol with a 35% dividend yield. How can that be? 35%. They generated tons of cash. So the irony is, on the one side, real assets have never been cheaper. Professor Gardner will say real assets are trading at 120-year low versus financial assets because financial assets are being manipulated. That's why, right? People just wake up and knew exactly what they owned. They would say, of course I would pay 3 times earnings for Petrobras. It's the biggest oil company in Brazil, right? And I think oil prices are going to go up because we're running at inflation. The Fed's going to have to print the money or trigger the revolution. Right. So Professor Gardner will say, what would happen if I remove risk from capitalism? Let me give you an example. What would happen if I remove the lions from the savannah? And one of the students will say, well, the gazelle population, passive investing would explode. Another student will say, well, but then they'd be competing for scarce water resources and die off, which is what we're happening with inflation. Then Professor Gardner will say, correct. It's the biggest line in the entire movie. Correct. When the Fed intervened in bond markets, they broke the ecosystem of capitalism. And that's why stocks no longer make sense. And if you understand that stocks no longer make sense, and you just look at real assets, look at the companies, look what you're buying, you'll start to go, oh my God, imagine this. Imagine reintroducing a herd of lions back into the savannah after the gazelle population had exploded by 10x and has never seen risk. Those people would make a killing. That's what I want your viewers to see. I want them to think for themselves. Don't trust the system. Don't trust your financial advisors because they all have to invest across the board. But look at real assets; they have never been cheaper. And by the way, if you're buying a diversified portfolio, you're only getting probably 4 or 5% of real assets. The rest of it you're paying. Think about CloudStrike. CloudStrike right now trades at $65 billion. They had operating profit of 26 million and interest expense of 25 million. And you're paying 60 billion for that? How can that be? Who would ever buy that? What's happening is the more they issue shares, the more they go up in the index. Then the quants buy it until the very end. And I think these stocks will continue to go up until the very end. And during Germany, this is just a replay of Weimar. Right? The same thing happened in Germany. These stocks went up till the very, very end. Then the currency collapsed. They all went to zero. And by the way, nothing happened to the real economy. If the real economy back then was 24 billion, a year later it was 24 billion. It never impacted the real economy. All it was a transfer of wealth from creditors, bondholders, to debtors, real estate holders. That's all it was. So yes, I think real estate's a great investment. I think real assets are a great investment, and it's part of the storyline in Money Game.
I love it. I love it. So my own pursuit of real estate, I worked the tech side for a single family investor. He was doing about 10 single family transactions per month for years before he ever hired me. And you know what? I am going to do it this way.
Nice move.
Yeah, so So for years he was doing that, but me, I was actually running all the tech and IT stack from Taiwan for about 4.5, 5 of the 6 years that I was working for him. Let's see what we got here. Yeah, that's still okay. Yeah, I'll go ahead and do that.
Nice move. All right.
Thank you. So but that also made me lose my train of thought because I just pinned your queen to your king, which means you're gonna lose it.
Oh, that's a disaster. Nice choice. Nice move. Nice move. This is fun. All right, let me go here.
It's really hard to concentrate and do it at the same time, though, right?
100%. It's so much fun. It's all good.
Yeah. So, I forgot where I was going with it. That's kind of fun. Oh, yeah, no, that'll die.
Oh, no, it's not. It's close.
No, it's not checkmate. You can still block with your rook.
Okay, good.
And now you can take the bishop.
Okay.
Yeah, exactly. There we go. All right. So now I'm sure I got something. Actually, I'll just castle.
Nice move.
Thank you. So so I think I was getting into stability alternatives. Right. I was talking about real estate. Old boss was flipping 10 houses a month. One of the issues that I had with that is, being from outside of the US, I was going like the remote base guy is going to be the first one to lose his shirt, right? And so when he ended up getting into multifamily, all I could see is now there's something that a guy from the internet can make happen, and of course, what you're up to in this sort of play is you're selling securities, which most people don't know what that even means, but it's passive interest. That's what it is. And of course, I think it's so funny that I have a friend who actually, one of the first things he did after passing the bar exam and finishing his law degree was go out and sell a security,
right?
Not knowing that was against the law. So it's pretty crazy that how do I describe it? It's that it's like even like could have a degree in law and not even know that's against the law, selling passive interest in. But I guess part of it is because of Shark Tank or whatever. But I guess the question that's really coming to my mind is how much of what you describe is how much of it is a bug, how much of it is a feature. I think so like how much of this is intentional?
I think it's 100% intentional, right? So I don't think I don't know if the Fed knows exactly what they did, except maybe they do. Think about this. BlackRock was a tiny company in 2007, right? When they intervened in bond markets, BlackRock has now gone from, I don't know what the number was, something small, to $17 trillion, something like that, 13 trillion, whatever it is. So honestly, I actually think this whole thing was a takeover of the financial system. It was a coup of the financial system, right? There's no human in the world would buy these stocks. Like if you looked at Boeing, if you look at the numbers, every year they can't cover their interest expense. No one in the world would ever buy that. No humans would buy that, right? And so by removing risk and controlling interest rates, humans would have looked and said, well, I'm not going to buy Boeing. And then what happened? Well, let's take a better example. At Hometime International, which was a deli in New Jersey. All it was, a tiny little deli that loses money, okay? Everyone would have looked at it, humans would have laughed. They would have said, why would I pay $10 million for a deli? What are you, an idiot? Then what happens? The deli or Boeing or Amazon or any of these companies goes from 10 million to 115 million. And then the clients of the clients of the firm say, how come you didn't buy that deli? It went from 10 million to 115 million. And the portfolio manager's sitting there going, well, because it's a deli that loses money, right? And so when they remove the risk, all these portfolio managers got fired, right? That's why there's no price discovery. So I think this was a coup of the financial system. Now notice that 85, 87% of the entire market is now passive and quant. So I would argue the stock market is now a policy tool of the Fed. So notice that when everyone talks, they say, well, you should buy Boeing because the Fed's going to cut rates. Well, what does the Fed cutting rates have anything to do with the fundamentals of Boeing? They don't. They have a lot to do with the price of Boeing, because if they cut rates, maybe Boeing goes up. But we all know the value of Boeing. It's zero. Right? Just like the deli in Jersey, just like CrowdStrike,
Right.
all those companies.
Right, but the thing is, people have heard of Boeing and they know that it's basically the major aircraft developer in the United States. So I think that people are thinking, oh, well, it has to turn around. Would it, like, is America just not going to build airplanes? Like, I think that's where they're coming from. But is it is it a good decision? Yeah.
So what you're really saying is that that the Fed will never, or the government will never let Boeing go bankrupt, because there's only two of those companies in the world, which is my point. It's not capitalism anymore. It's a centrally planned economy. And the stock market is no longer a capitalist system. It's being centrally planned. So that's making my point. We all know the value, but it's a centrally planned economy through interest rates. Right? So you're basically just making my point. So people aren't looking at the fundamentals. Yeah. And by the way, it's not even people in markets anymore. It's passive and quant. It's machines. So you're basically making
right. So like pension plans.
Correct. And they're all looking at the price of the stocks rather than look at the fundamentals. But the scoreboard's broken. Right. So the scoreboard of finance is broken. So all that's happening is the price is going up, and they have the entire world there. Warren Buffett says you got to focus on the players on the field and not have your eyes glued to the scoreboard. Notice that everyone's got their eyes glued to the scoreboard. Technical analysis, right? Hey, look, they're focused on technical analysis. The chart looks good. They're focused on the Fed's going to cut rates. They're not actually looking at the players on the field any longer. That's a really big topic.
Sure is. We got 35 seconds. So let's see if we can blast out some moves real quick, because I'm gonna be fast. But once again, like, I'm really excited to see the money game. Hopefully that gets up here north of the border. Once we're off this, I'll discuss with you, see if there's any way I can help that out, because I think financial literacy is so important. And I can tell you, I was dragged kicking and screaming into understanding economics and finances and stuff like that. I did not want to know, and it's really life changing.
I think it's really important.
But so and you have a website for the money game, right? Is it the money game movie or
money game film? I think it is on Instagram.
All right, excellent. So I'm sure people will be eager to check that out. But LinkedIn is the best social media platform to reach out to you.
100%. If you want to connect with me on LinkedIn, I'm happy to get back to them. I'm happy to talk about it. I think we have a huge topic here, and I didn't make the movie to make money, although I think we're going to, because I think it's going to be a really big movie. I made the movie to show the world that capitalism is broken, and what I'm hoping for is a return to capitalism. Because if you remove risk, it's no longer capitalism, right? Capitalism requires risk to allocate scarce resources, and if you remove risk, it's not capitalism. So you're living in a centrally planned economy. Now the entire world is misallocating resources, which slows the real economy. That's why you're seeing productivity at a 75-year low. So when you see a big problem like that, you're like, okay, how can I fix this? Therefore I made a movie about it.
I love it. And one other thing, sorry, it's actually not for you, Chris, it's for you in the audience. I just want to let you know that if you've been watching this episode and you've been experiencing searing pains in your eyeballs, I'm quite confident it's because of the downright hideous subscribe button down there, and you might want to do something about it. Okay, really, full disclosure, if enough people click on the subscribe button, then YouTube will actually start to pay for these videos instead of me, and I'm really eager for that. The trade-off for you is my videos may show up on your list of suggestions, but there's no guarantee of that. Who really knows? But quite frankly, I just appreciate you joining me today. Just like Chris, I appreciate you joining me. This has been a lot of fun.
A lot of fun. Thanks for having me, Dan. It was fun.
Does nothing but put more money in the pot.
Right.
If we talk about just the investor side, I mean, Shane talked about the sponsor side a little bit. I'll talk about the investor side. Okay, so you want the most money in terms of return with the least risk. All right, you want to do it yourself, you can go get 13 or 14%. You're going to do all the underwriting, it's not going to be passive.
If you bet, probably not.
I think I'd have to bet at least 2,500 before they fold.
And the pot is
4,000.
4,000. Yeah, I think you're right, but I'd rather just check.
Okay.
First position, you have the right of collection and the right of foreclosure or sheriff's sale, well, wherever you're at.